This candle is trying to push down, it's failing to do so. And then what you could do if you wanted to confirm this zone, you could have got another 10R out of this trade easily. And then as you can see, what happens is price comes up, it tags in perfectly into this right here, and then it takes off. Hey guys, welcome back. In today's video, I'm going to show you an absolutely amazing strategy that you can use to pass prop firms like Ftmo, MyForex funds, or for that matter, just any prop firm out there. You know, this strategy is really simple. You can just use it on the 1 hour time frame or whatever time frame you wish. Or you can also use it, you know, in conjunction with a daily bias and things like that, just to, you know, gauge which way you are trading in. But essentially what this is based on is an engulfing candle. So obviously a bullish engulfing or a bearish engulfing. So for example, if we are coming down, right, and then we've got our bearish candle right here, and we've got a bullish engulfing, and this bullish engulfing candle, obviously an engulfing candle does show us momentum in the market. But if this bullish engulfing does fail to create and break structure, and it fails to, you know, start a trend, and what it does is we get a bullish engulfing, and then price breaks to the downside, what we're looking to do is we're looking to get involved right here, and then continue to the downside, and the same on the other side. So let's say we are coming up, we get a bearish engulfing, and this bearish engulfing fails to take out any, you know, significant structure. It fails to, you know, start a new trend, and it just continues. It comes down, we get a bearish engulfing, and then price continues to the upside, you know, coming up here. What we're looking to do is we're looking to get involved sort of on this candle right here. So come in, and then obviously usually it does take off. Like I said before, this strategy is super simple. If you put time into it on backtesting on the charts and things like that, the better you'll get it, and the more obviously opportunities that you will see. For me, I found that it works probably best on the 1 hour chart. It does seem on the 1 hour chart that price is a little bit more clean for this strategy specifically. But, you know, if you wanted to do this on a 5 minute, a 15 minute, you know, maybe even a 4 hour, you know, you could do that. And obviously what I'd recommend is if you wanted to do that, go into your charts, test this out and see if it works on those specific time frames. So that's just the overall idea of the strategy. So what I'll do is I will just come down and I will show you a couple of examples. And I'll also show you how you can confirm that this zone is going to work. So as you can see on this first example right here, is we have a bearish engulfing. So this candle does close below this candle right here. So if I just come back up to it, actually, what I'll show you is, in my eyes, a bearish or bullish engulfing is when a candle closes above the previous one. So in this example right here, this bullish engulfing clearly closes above this, you know, bearish candle. And then on this side, this bearish engulfing does close below this bullish candle, and for me that candle is then engulfed, making this an engulfing candle. And if you obviously get a strong close on this candle and you don't have, you know, sort of a wick like this, then it's a little bit more confluence. So that's just what an engulfing candle is if you didn't know what one is already. So coming down onto this example right here, as you can see, what we've got is we've got a clear close below this bullish candle right here. This candle here fails to, you know, continue the trend to the downside or break any significant structure maybe down here. And then what it does is it immediately reverses to the upside. What you can then do is you can mark out the high and the low of the bullish candle. And then as you can see, what happens is price comes up, it tags in perfectly into this right here, and then it takes off. What you can do to confirm this zone, and what I'll talk about first, is as you can see, what you can do with your stop loss is you can cover this low right here if you want to do that, or you can just cover, you know, the zone itself. So if you cover the zone itself and you target at the most recent, you know, high or low, on this trade specifically it would be a 10-hour trade, and this is where obviously the 1 hour time frame there will be less opportunities, but also, you know, there is a lot of risk to reward and a lot of percentage to be made. But what I would personally do probably is cover this low right here just to be a little bit more conservative and, you know, obviously give your trade a little bit of room to, you know, maneuver. And obviously what it could do is it obviously could come down and, you know, mitigate somewhere in this candle right here and then go. What you can do to confirm this zone is, as you can see, if I just zoom in, what has happened once we have come into this zone is we've obviously come in. These candles here have got big wicks on them, showing that price is struggling to push down, and it's even more significant on the 1 hour time frame because obviously there's a lot more price action within this candle rather than a 5 minute or a 15 minute. This candle is trying to push down, it's failing to do so. This candle is trying to push down, it's failing to do so. And then what you could do if you wanted to confirm this zone is you could get involved on this bullish close. So once this candle right here closes bullish, you could then enter the trade on that candle right there, giving you a little bit more confidence that this, zone right here is going to hold. That's perfectly fine if you want to do that, but you can also, let me just not get that one back. But what you can also do is you can also set a limit right here if you wanted to do that. So what you could do is obviously go on the charts, test out which works best for you. And obviously, you might find that, setting limits here and just, set and forget and, go about your day. Maybe you've got a full-time job, or, you've got other commitments around trading. Maybe, you find out that the limits being set here are, a little bit better for you. Or what you could do is, obviously, if you're around and you've got access to the charts and you're around to look at the charts when, obviously, if you set an alert on this area, set an alert here, once it goes off, if you're around, you can wait for a bullish or bearish close depending on which way you are trading, and that's absolutely fine. So moving on to the next example right here. As you can see right here, we get a bearish engulfing. The candle clearly closes below. It fails to break any significant structure down here. And then what happens is we come down totally reverse, and then we come back into this zone here and then take off. Obviously, the nearest and the most logical point to take a profit will be obviously the most recent highs and lows. This trade here specifically does run, quite a bit more. So you could have got another 10 hour out of this trade easily. What you could do is, obviously, if you want to, you can cover down here, and then obviously to target up here would be nearly 6R, or targeting these highs on this specific trade would be around 2.5%, which is it's perfectly fine, and it's respectable percentage right there. And obviously, if you're covering these lows right here, you will have a little bit better of a win rate. But what you can do is just cover that and then target right here, 1 to 5, 1 to 4. Absolutely brilliant trade right there. And then as you can see on this example is not as clean as the other ones, but I thought I'd just throw this in here just to put into the examples, just to show you what you're kind of looking at. As you can see, we get a bullish engulfing, clearly closes above this candle right here, and then obviously, as I said before, you would mark the bearish candle that causes the engulfing candle. What happens then is it fails to break any significant structure again. It fails to break highs up here. It even fails to break this high. It breaks this high kind of only with a wick. It doesn't actually close above and show us any momentum. So, and then what happens then is we come up, reverse, tap into the area right here, and then we take out these lows. So that's another example, and another nice trade. Obviously, depending if you want to cover this high right here, the risk to reward will be a little bit lower. But what you could do is you could obviously just cover the zone that you have marked out, which would obviously significantly, increase your risk to reward. And last but not least, this is a very nice trade right here. And as you can see, this is, start of December. These trades are all quite recent in price action. And as I said, if you go through and you do test this, you'll find out that it's really, really simple. It's really easy, and you will be able to put this up if you go ahead and just test it out on your charts. So as you can see right here, what we've got a bearish engulfing. This candle again, very, very simple, fails to break any sort of structure, fails to create a trend, to the downside. What happens then is we come down, we've got a little pivot here. So it pivots, pushes up, comes back down to our zone, taps in perfectly, and then off we go. If we just look a little bit closely, as you can see again, if you want to confirm this zone, what you can do is, set an alert. So you've got your trend line, boom, set an alert right there. It taps in, you wait for this bullish close. This is your entry signal to get in if you want a little bit more confirmation and you don't want to set a limit. Enter there, target the most recent highs. 1 to 5, absolutely brilliant trade. And again, you could easily pass in 1 or 2 trades. You could easily pass prop firms, Ftmo, MyForex funds, whatever it may be. But if you're happy, what you can do is you can obviously set and forget, set a limit order here, wait for it to come in, tap in, and then go. And like I said, what you can do is if you go into your chart and you practice this, what you will notice is you will notice the high probability setups, where the high probability setups come from, and just how you can get involved in the best areas. But again, if you want to wait for confirmation on this trade right here, as you can see, the zone does hold. But if you were waiting for a bearish close, you'll be waiting for this, and the risk to reward will just not be worth getting involved in this trade. So you need to keep that in mind as well. You could set a limit and then the trade is still viable, because if you set a limit on this area, you're looking at around 3%, which is still very, very good. On this example right here, you could wait for the bullish close, get involved here, stop below the low, target the most recent highs, which would be here for around 2%, or you could target, you know, whatever 5R. It is 5R quite comfortably, and a lot of these trades do it 5R quite comfortably. So that's just the overall strategy, guys. I'd recommend obviously going onto your charts, testing it out, and you'll notice that this is really simple, but it's super effective. And yeah, it's one that you could obviously incorporate and add into your trade plan. So if this video did help you out, guys, and you did enjoy, please leave a like on today's video. If you have any questions, feel free to drop them in the comment section down below. And without further ado, guys, thank you very much for watching, and I will see you in the next one.